I got a call from a gentleman who owns a construction company here in town. I pitched him 3 times on 3 different deals and he passed on all of them. Well, effectively, we've doubled the equity at the partnership level in all those properties. He calls me the other day and says, I wish I would have started with you 4 years ago. I want you to call me first on the next deal that you have.
Welcome to the Bulletproof Cashflow podcast. Let's get into the show.
Hey everyone, this is Augustino. When you're considering the purchase of a multifamily property, you also need to consider the financial stack and what that's going to look like. So this will include everything from defining where the equity from the investors will come from, the debt from the lender, as well as the equity split between the limited partners and the general partners, among many, many, many other things, right? So today's guest, he understands the importance of raising capital and the needs for really putting deals together and how to do it. Over the past 10 years, he has been instrumental in the negotiation, acquisition, management, and the sale of single-family properties, mobile homes, and multifamily buildings as well. He has eventually ventured out to start his own company. So today, he is a managing director of Clarity Equity Group, a real estate services firm that provides help with capital raising and placement of both debt and equity, sourcing quality deal flow, and advisory services for large real estate deals. He and his company, they help people with capital raising, private debt syndication, and the arbitrage of commercial assets as well. On top of all that, which is a lot, he is the author of the best-selling book, Real Estate Flight Plan, a combat pilot's guide to navigating real estate with success. With all that, I'd like to welcome my good friend, Seth Wilson, to the show. Hey, Seth, thanks for coming on, man. Appreciate it.
Hey, thanks for having me. I love the energy and I really look forward to it.
Yeah, awesome. Well, if you like what Seth has to say, you can reach him via his website at clarityequitygroup.com. And if you like our content, please don't forget to leave a comment and rate the show. And finally, if you text the word freedom to 202-410-4202, you'll receive a free ebook, The Bulletproof Guide to Finding a Broker. Okay, Seth, we talked a little bit about your intro. Can you tell the listeners about how you got your start in all this?
Well, I got started in real estate quite by accident, actually. When I was in college, I was an aviation management major. My career goal was to become a career pilot, whether that be commercial or private or in the military, which is what I was aiming for at the time. And there was a professor who was quite crass. And at one point, I guess he was having a bad day and said, you guys all just want to fly heavy metal and chase airline stewardesses around. And I said, well, that sounds like a pretty good way to make a living to me. I don't understand what the issue is. He said, you guys need to be reading books like Rich Dad, Poor Dad, and he continued on with some other things. I thought Rich Dad, Poor Dad was a book like A Tale of Two Cities, which I later found out it was not. I went to the library at my college and they didn't have it. So I went to a Barnes & Noble, I believe, and they did have it, but I didn't have the $19 to actually purchase the book. So I sat in the aisle of the store and read the book over a course of 2 days. So as a college student, I had those challenges then. After that, I said, well, this has got to be the secret to success here. This just makes too much sense. And I certainly should start building my real estate portfolio. So in the July of 2007, I timed the market absolutely perfectly to buy at the very top of the market. I bought a house in Omaha, Nebraska using a VA loan. At this point, I was a navigator in the Air Force at Offutt Air Force Base.
And you were living somewhere else too, right? You were living somewhere else, Seth, when you bought that place?
I was living in Omaha at that time.
Okay.
And I moved into it with my VA loan. But then when it came time for me to transfer to go to pilot training, I could not afford to sell the house. So that's where I had then moved down to Texas and had to manage the property remotely. It was a very bad time to try to get into real estate with no money, no connections, no experience. So, but I had all the desire in the world, but just none of the sense to actually be able to make it happen. So I couldn't get into flipping houses, which was the next logical step when I was in Omaha. So I got into mobile homes, and I did it on the rent-to-own program. So I'd buy them cheap. Actually, the first one I bought was $1,500, $100 bills on the hood of the guy's truck. and he took off. And then that night the pipes froze, and that's when I learned about PEX piping. So there was a learning curve there. How's that?
Yeah.
After pilot training, I saved as much money as I could in pilot training down in West Texas by living in a fifth wheel RV with my dog Sally. And it was incredibly hot in there. The air conditioner could only cool the outside air temperature by 20 degrees. And it was routinely 105, 110 degrees outside. So it was not a comfortable situation. So, but I saved my life savings, about $75,000. And I said, I'm not going to flip houses. I'm going to get into commercial real estate. So once again, now I had some money. I still had no connections, and I had a little experience from what I had read in the books that I had read over the course of time. And I saw a 12-unit apartment building that was on the wrong side of what's known as Troost Avenue, which is a social economic divide that's been in Kansas City for many years. But I didn't know any better at that time. Like I said, I had no connections. I just thought this property was excellent position to be turned around, which is what I was going to do. I was going to do hands-on value add. Well, what happened is that through sheer luck, it became part of the Troost redevelopment corridor. In 2013, 2014, there was a lot of improvements in Midtown Kansas City. So a lot of the more eclectic people, let's say, wanted a more vintage or authentic experience. And we were offering vintage apartment buildings. We called the buildings the century buildings because they were 100 years old and they had 100-year-old building problems, which is great.
To say the least, great.
Yeah, after that, my family got involved and said, hey, we want to get involved and be involved in the next property. So I bought another 12-unit property. And at this point, I had kicked out the management firm that was managing my properties because I didn't feel that they had my best interests at heart as an owner. And I had my brother, Brent, move out from St. Louis. He was a recent college graduate and a department manager at Lowe's. And he moved into the buildings and he got to see all the ins and outs, literally and figuratively, of property management. So as soon as then I bought a 44 unit, and that was strictly with friends and family money. But then after that point, I knew I wanted to do more and bigger and better. And then I had an issue. It's that I couldn't buy any more property because I had run out of equity. So my friends and family rubber band had been a stretch as far as it'll go. And I had to find some other way. So thankfully, through some marketing efforts, guerrilla marketing efforts, if you will, I found a high net worth individual who was interested in partnering up with me. And then we did a 93 unit and a 144 unit, and we continue to grow today. And actually, we're trading out of those properties now. So that's the nuts and bolts of how we got to where we are today.
Well, there's a lot to unpack there, right? So I guess, well, first off, though, at the very, very beginning, it took you making a decision to actually get into this real estate thing, the commercial real estate thing. So you had $75K, you're going to do this commercial thing. Did you ever have any doubts back then that you're actually going to do it? Or did you see yourself as, I got to make this thing work. I have to, because there's no other choice. I have nowhere else to go. Like, what was your thought process? Do you remember that?
Yeah, I do. It's a very interesting question because I'm the guy that tells everybody what I'm going to go do, and then I better go figure out how to do it. So I told everybody I was going to go do all these great things in real estate and be this big, commercial empire. And what happened is, you better go figure out how to do it. And like I said, it was my life savings. I mean, that was every nickel I had. There was not a lot of reserves there. So I was working full time still at that point in the Air National Guard, and I just had to make it work. I mean, failure was not an option, as Eminem says.
Yeah. No, that's awesome. That's amazing. But that's also something that I often tell my coaching students as well. It's like, you have to make a decision and you stick to that decision. You see it all the way through. People have built success in this business. So that's absolutely true. But I think one of the interesting things that you've done is, after creating some success and demonstrating this to friends, to family, getting people that wanted to partner up with you. But then you did that marketing you mentioned earlier, and you pulled in a high net worth individual. It sounds like you're still doing business with today, which is super. How did you do that? And maybe talk a little bit about that. Like that's probably one of the biggest things that people out there want to know and understand. Like, where'd you line that up, and how do you continue working with them today?
So you have to be the person that they want you to be. So, for example, you have to be a person of integrity. That goes without saying. You have to be a person that's going to be able to take care of things. When you say, I'll take care of it, there's always going to be a place for you in this world. And then you actually go ahead and take care of it. So at that point, what happened is I was trying to get into the Kansas City Business Journal. And there was a real estate editor, and he also covered entrepreneurs. And my wife still is, at the time, she was working for a local ABC television affiliate selling marketing commercials, local commercials, so car dealers, things along those lines. And she found the guy and cornered him during a mixer and said, hey, you need to talk to my husband because he's been trying to get a hold of you and get you to do a story on him. And she literally cornered him in the room. And the next day he calls me and says, hi, Seth, this is Rob Roberts from the Kansas City Business Journal. And I wanted to tell you that I met your wife last night. And I was like, yeah, I heard you did. My story at that point was published in the Business Journal on a Black Friday in 2016. I got a whole bunch of phone calls and emails from insurance agents trying to sell me insurance, and a couple of emails from individuals that were interested in pursuing a long-term business relationship.
So it sounds like, though, that you basically got the word out, and you did it through the old-fashioned method of using the newspaper, so to speak. I mean, that's it, right?
Yeah,
I mean, yeah, excellent.
So I'm actually, and it doesn't end there, obviously. You know, as you know, once you start on one thing, you have to keep it up. You can't just hang your hat on an article that's 4 or 5 years old. So I'm actually writing an article for the Business Journal right now. So that's going to be great and published here in the next few weeks.
Excellent. Yeah, I mean, and that's one of the things and it's funny you should mention that. One of the foundations to our training, as well as we talk about this, I think we talk about it on the show too, is the emphasis around sales and marketing, getting the word out, and then demonstrating integrity around not only what you do and how you do it, but also your own personal integrity, because people are investing in you, right? That's a key aspect of it right there. So,
absolutely.
Yeah. So in the green room, we're talking extensively about family offices. So I'm guessing that this gentleman that you referred to before, was he a connection at a family office, or was he, did he lead you down that path?
No, he had a liquidity event. He sold his company and was familiar with real estate and wanted to continue to invest in it. So the family office path, how I got into that, yes, he certainly spurred that idea of working with a patriarch or matriarch in a company, or with a family that's had a liquidity event. So if they have sold their company to another company, or if they have gone public, and they receive a large amount of liquidity at that point. I also like family offices for a few different reasons. First off, they're using generational and legacy wealth, which is outstanding because I can invest my own money alongside with them, because I have 2 young children myself, and obviously I think and plan for their future. So I can invest money alongside of them. What happens there is that creates an excellent alignment of interest, because not only is maybe their son or daughter's trust invested in the deal that I'm doing, but also my own children. So literally, really putting your money where your mouth is on that. Family offices are also much more personable, as opposed to, say, a private equity firm, an insurance company, or something along those lines, where they have their investment mandate, and come hell or high water, they need to be out of the deal in 4 years, and you better be having that IRR or equity multiple complete by that time. So that doesn't really jive with me, because if we need to sell it this year, or next year or the year after, I want to have that flexibility because I don't know when the next pandemic's coming. I don't want to have to sell because your investment mandate tells me I have to.
And now, and for those of you out there that don't know what a family office is, we should probably cover that, right?
Yeah, sure. So,
we should, yeah.
go ahead.
All right. Well, I'll start it off. All right. And basically a family office, just as Seth pointed out, is a family that had some sort of liquidity event. Maybe think of, let's say Walmart. All right. Walmart would be a good example. The family of Sam Walton's family, Sam Walton's the founder of Walmart. They all have quite a bit of money, and maybe they liquidated a bunch of stock and now they're sitting on hundreds of millions of dollars. Well, typically what they'll do is they'll have someone put someone in charge to go off and invest this money to keep the generational wealth up, as Seth pointed out, right? So those individuals they set out to put their money into good people, good asset managers, people they can trust, people they like, and then expect those returns to come back.
Yeah, absolutely. So if you want to put some numbers to it, generally they have investable assets of $100 million or more. The family offices also don't like to write small checks. The ones that I've worked with and communicate with, they generally start between $2 and $5 million. So that's always nice to be able to have that kind of equity ticket behind you as well.
Well, let's talk a little bit about that. So I know that one of the things that you do, that your group does, is get people in front of these types of family offices. So maybe talk a little bit about that. It sounds interesting. I think that for someone that has a track record that's listening to this right now could probably use that kind of support.
Sure. So right now, our current focus is really career starting and nurturing relationships. Whenever we speak to a potential equity investor or debt investor, for that matter, that's using their own funds, it's not a marriage on the first date sort of thing. We do not have a lineup of deals that need to be invested immediately. Generally, the relationship starts, and 6 to 24 months later, we do our first deal together. So we get to know each other, we meet each other, we understand who we are. We get to the point in the relationship where we can just text each other, as opposed to going through a formal, going through a secretary or something along those lines. Just, hey, send me a text, no big deal. And that's really a great spot to be in. The challenge there is that you have to be dressed for the party, if that makes sense. I'm not talking about a suit and tie. I'm talking that you have to have the question of what they're going to ask you is, what's your story? And listening to your podcast, I hear it time and time again. People ask, what's your story? And a lot of people don't have a compelling story to tell. Not because they don't have the experience or not because they haven't been there and done that. They just like, well, what do you want to know? Let's talk about it over a drink, as opposed to having let's say a pitch deck put together that explains, this is the deal I did 3 years ago. This is the numbers. This is the return. This is how we did it. Next. Hey, look, we did it again and again and again. So especially when people have run out of friends and family money, that's when they really need to start concerning themselves with putting marketing materials together, putting a pitch deck together, and kind of cleaning up their image so that when they go to speak to somebody, that they look good, they sound good, and they are good. Because I can't count the number of times that we see potential deal flow come through our office with our deal desk captain, and he sends it to me, and it's just a mess. I mean, they may have a ton of experience and everything else, but there's typos, there's misspellings. It's if you're trying to raise $1 million from one person, or 2 million or $3 million, what do they think of you now?
But it's funny, there's so many parallels, right? Because when someone's starting out and they're raising that money, really those connections start, like you said, 6 to 24 months. I mean, you're raising money today. If you're starting out, yes. You're talking to people today with the potential of getting a deal maybe a year from now. Who knows, right? But it takes sometimes it takes a while to generate the interest from the broker, for instance, to even pass along a good deal to you. And then you have to be prepared to close on that deal. But it sounds like the same thing in your case when you're talking to a family office. They need to develop a familiarity with you. They need to know who you are, what you're about, and really show up is really what it is. Like, are you consistent with what you're saying and really showing up like with your pitch deck? Does everything match up? Are you dressing for the party? Like you said, that part is absolutely huge. But it sounds like though, it's a very different level, right, than hitting up your friends and family, right? This is a very different type of scenario here, correct?
Right. So first off, they have sophistication, very high levels of sophistication. So, maybe work at a family office isn't necessarily for everybody. You could work with another high net worth individual. And the reason that you want to target these kinds of people is because they have the capital to be able to write the check to you, as opposed to, just a local businessman that has a small company or something like that. He may only be interested in a $50,000 or $100,000 check. And then you have to collect a lot of those to be able to kind of do the deals that you want to do. And that's very difficult because the amount of time to cultivate those relationships is the exact same as working with a larger investor. You had spoken to, I kind of lost my train of thought there, but working with friends and family, they're investing in you. They don't understand cap rates, NOIs. They don't understand, the terminology, acquisitions, trading in, trading out. They don't understand that. They say, hey, I trust Tim because I've known him since we were 7 years old. I have some money in a 401k that's not doing well. I'm going to convert it to a self-directed IRA, and I'm going to give it to him because I trust him. And that's that's great. But when you're going to the next level, taking the next step in your business, you need to sharpen that up a bit.
Yep, absolutely. So, but I imagine then, aside from the introduction that you and your group handle the introduction, you handle cleaning up the presentation portion of things when it comes to that individual. That individual probably should have some sort of track record at this point though, right? They should have at least done some deals, have some deals under their belt, I would imagine, right?
Yes. So a lot of newbies like to have straw man deals, which is okay to show, hey, this is what we will invest in going into the future. The challenge is that you need to, when we work with our advisory service clients, they have to have some experience already. So really they have to have run out of friends and family money. They know they can do bigger. They know they can do better. Even if it's smaller deals, like a 12 unit, or maybe you've had a whole bunch of single family houses and you're looking to step up into a triple net lease, something along those lines. So we have to show something. We need some traction there. Otherwise, you really are at the friends and family level. And I'm not saying this in a derogatory manner at all. That's how I started. I know. I mean, my parents, put up some money and then they liked it and they got their money back and then a whole bunch more. And then my friend from 8 years ago invested and he got a bunch of money and now he wants to do another one. And that's just how it goes. The challenge is that they only have, their pockets are only so deep until they run out. I didn't have a rich uncle that set me up with all this. It was friends and family. It was mom and dad. It was my Air Force buddies. And then we moved from there. Yeah.
Well, hey, listen, and that's the thing though, too. Yeah. You're not saying anything bad about anyone really. You're just describing the progression, right? So when you're first starting out, you start off with maybe some close friends and family. Then you expand the circle for your bigger deals. And at that point, then what do you do, right? Then yes, you go to the family offices. Maybe you go to an equity firm like yours or some other ones, for instance. Or there are others out there, and the equity, the splits look very, very different at that point. It becomes a little more complicated. But just like you said, though, those deals are typically a little bit larger as well. Right. And those return targets become far more important. And different level of sophistication. Do. Yeah. Different level of sophistication.
Different level of sophistication. Absolutely. And to finish answering your question is, once we get someone ready to go and cleaned up, ready to meet more people, whether that be on the debt or the equity side or both, we go into our database. We now have more than 2,000 professionals in our database that we have spoken with. Okay, these are not timmybigwheels@hotmail.com. These are serious private equity people, family offices, other sponsors, banks, lending institutions across the United States, credit facilities, private lenders. We have all this in our database, and we have actually spoken to these people. We've pre-qualified them, pre-vetted them. And then what we do is once we know that we have someone that we can take, you look good, you sound good, you have a track record, maybe not the most extensive in the world, we will then tee up a phone call and an interview with the people that you need to be speaking to, and we'll pre-vet them as well. So for example, we're not going to waste your time on a call with somebody that's no longer in that market, or maybe that's not in their box. They don't have an appetite for it. We're not going to waste your time on that. We're going to find those people that want to connect, and that's what we're doing at that point, is that we're connecting and going from there. And that's a guarantee as well. That's not a maybe we will. It's a guarantee.
So when you say guaranteed, you mean if someone wants to say start up a fund or something like that, they want to use it they want to have $5 million in this fund, for instance, you're going to guarantee that they get the 5 million in there, right? You guys are going to keep on working until you get there. Is that what you mean?
No, I can't guarantee that, because there has to be some lifting on your end. We guarantee that we're going to put you in contact with the people in our database that will get you there.
Got it.
From there, it's up to you. We can only handhold for so long.
Yes. Well, yeah. Well, exactly, because the person you're going to be coaching through, they have to be able to speak the language. I mean, the same rules apply. The same rules apply when you're pitching an investor, even when you're pitching your mom and pop investor, friends and family. You still have to know the lingo. You have to have some air of sophistication. You have to sound like you know what you're saying. And if they don't, no matter how well you coach them, it could be a problem for them. Correct?
Right. But we don't take on a lot of advisory clients simply because we have a lot of other activities that we're doing within our firm. So it's an exclusive group, and it's not only that about raising the money necessarily. It's also about the continuing piece, that now we have a sponsor that we know can deliver. We know that we can trust. We can push deal flow to that we receive, nationwide, and we know that they're going to be able to close, and we want to be a part of that.
And that's Seth. That's a good point. Is that you're expecting to see that person that will be on that phone talking to the family office. You're making the introduction. And if you put someone that's not prepared on that phone call, that family office won't want to hear from you ever again. So you're taking a bit of a risk, so to speak, right? It's like, so you have to make sure, just like you pointed out, you can't just take anybody. They have to be ready to take that on.
Yes. So what we do is very niche-y, and there is absolutely no way that I'd rather run down the street naked right now than put people that are not qualified and me vouch for them in front of any one of the 2,000 people in our database.
No, yeah, and you have to be that way. That's the thing. It's just like I said, it's the last thing you want to do is put someone there and they totally mess it up. You burn a relationship, and that relationship has a lot of value. You can't. Yeah, I totally understand. But at the plus side of the whole thing, though, if they do a bang up job and they convince that family office to believe in them and invest in them, then you work with that individual, that operator, and you get a more deal flow. You help them with the debt side. There's a lot of support infrastructure that you guys provide even after the fact, right?
Yeah, absolutely. So the theme here is that we want long-term, repeatable relationships with people. That's what we want. So, family offices may not always be the best route. It could be that they need a smaller check size. We have plenty of people that do that as well, just from our relationships. For example, I got a call from a gentleman who owns a construction company here in town. I pitched him 3 times on 3 different deals, and he passed on all of them. Well, effectively, we've doubled the equity at the partnership level in all those properties. He calls me the other day and says, I wish I would have started with you 4 years ago. I want you to call me first on the next deal that you have. Okay. So if I can say, you know what, I'll I don't have a deal immediately, but here's another deal that I've pre-vetted. It's in South Carolina, let's say. If we want to go take a look at it together, let's go look at it. Now, is he a family office? No. Is he a high net worth individual? Yes. So those kinds of things that we can do. And there's no way that I'm going to burn a relationship that's 4 years in the making on a guy that is not a person of integrity, can't get things done.
That's right. No, then that part's huge. It's absolutely huge. It's the same thing that that I've mentioned before on the show, is that you have a fiduciary responsibility to your investors, number one, of course. And that is the one thing that an investor is looking for. They're looking for that integrity in the person that they're investing with. That is almost just as important as the deal itself. I mean, they got to make sure that, if the deal is fine, can they believe in you? That's going to be the next question. Right. So yeah, absolutely. Absolutely. Well, that's awesome. It sounds like a very interesting program for someone who's out there right now that has the experience, that has the wherewithal, and maybe even has the polish to really interact with you, and you guys can really determine if there is an opportunity for that person to get introduced to that network of 2,000 family offices. That is the next level right there, though. That is the next level, 100%, is getting
absolutely.
access to that network. Yes.
Now, they're not all family offices. So
right, but the individuals you have, that's all next level stuff, though, for sure.
Yeah, no, they're all well vetted professionals. They're not no Hotmail accounts here.
Excellent. Well, we touched on your book earlier. Do you have any other books planned in the future here?
No, I have my book, Real Estate Flight Plan. You can get that on Amazon. I make about 50 cents for each one that sells. Jeff Bezos takes the rest of it. So if you want to get a free PDF copy, it's on the website. Otherwise, you can make Jeff Bezos a little bit richer from there. So what I need to do is I need to update it. The book is now 4 years old, I believe, and it needs a good updating. There's a lot more stories, and I actually have some more chapters that I want to add, and some things that I've learned in the last 4 or 5 years. Excellent.
Well, we look forward to looking for a revision 2 of that one, for sure.
It's going to be a lot of work, so don't look for it too early.
All right. Well, guys, if you want to reach out to Seth, you can reach him through his company website at clarityequitygroup.com. I hope you got a lot of good insight on raising capital, especially around high net worth individuals and family offices too. That's a great way to help continuing in your build of your dreams. So looking forward to seeing you on the next podcast. Take care of yourselves, guys. Talk to you soon.
Thank you for listening. We hope you enjoyed the Bulletproof Cashflow podcast.